All right, welcome to the Big Crypto channel where we make crypto so simple that even a third grader can understand it. Now, I'm super excited to introduce you guys a new series of videos for Blockchain Insight Group, which are the crypto matchup series. So the whole intention for these are to give you a no bullshit fundamental understanding of crypto projects, delivered in a way that actually makes logical sense. There's a lot of these projects that people are explaining to you in a way it's like, this token does this and with the burn mechanism, and if you go into the blockchain with blah, 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 and if you look at the block explorer, none of that actually matters. What we need to pay attention to is what is actually happening. What problem are these protocols solving? And how do the cryptocurrencies play into effectively solving that problem? So for this crypto matchup series, we're going to be going over GMX and SNX. So that is GMX versus synthetics. So we're going to go over the actual problems that these applications are solving, these decentralized applications, what that problem they're actually solving, and how the tokens actually play into solving that problem. So let's go ahead and dive into it.
All right, now the first step of this analysis is going to be to actually check out the decentralized applications and the problems that they're solving. So I want to start off with GMX first. So GMX is a decentralized perpetual exchange. Now, what does that mean exactly? It basically just means that this is a platform that you can trade on leverage. So, and the problem that we're solving right now is the majority of individuals that have been trading on leverage with crypto have been trading with things like Bybit and FTX. Well, we've seen what happens when you're forced into utilizing centralized exchanges for things like that. So there is a very dire need for leveraged trading platforms that are decentralized so that you can connect your own wallet to it, such as by clicking this button here to go into here and to connect your wallet so that you can actually do everything on your own through your own wallet instead of having to have your crypto on a custodial wallet to where it's not your keys, not your crypto. And we have found out from FTX that it definitely never was your crypto. Okay, so that is the inherent problem that GMX is solving. Now let's look into how they actually go about solving this problem. Now, for starters, let's talk about how there are two different tokens, okay? There are GMX and GLP. GLP is their liquidity provider token, which is broken down into a basket of different assets. Now, let's actually go into the trading section here so you can see what it actually looks like from the user perspective to experience the decentralized leveraged trading feature that they have. So you'll see here on the right side that we have the ability to trade. We have the long, short, and swap. So you can just swap tokens right here directly, although you are limited to only being able to utilize these tokens with this platform because these are all the tokens that are actually available inside of GLP, which we'll talk about in a moment. These are the only tokens that are available on the platform at all, okay? So longing and shorting, I'll break that down really quickly. It's basically longing is essentially just betting that the price is going to go up. Right, so if I want to turn my USDC into Bitcoin, I can pay 1,000 USD to long Bitcoin, and then my leverage right here will determine how much I'm actually going to borrow to be able to bet with more money, essentially betting with more money than what I actually have, right? So I'm just trading with more money than I really have. So if I want to trade with $10,000, but I only have $1,000, I just go to the 10x leverage right here, and then I can go ahead and place that trade, and I'll trade with $10,000. Now, if the total value of what I'm trading goes below $9,000, then I get liquidated because I only had $1,000 that I was working with. So there's a smart contract that actually executes automatically to liquidate my position. And then that money is then used to pay back the individuals that are providing the liquidity, which I'll show you here in a moment. Now, why would you do this? Well, because if you do 10x leverage and it goes up 10%, well, you didn't just make 10% because you're trading with $10,000. So you actually made $1,000 on your $1,000 investment. So you actually got $2,000 just from watching the price go up by 10%. Okay, so, and then it's the same thing to the downside. You can bet that the price will go down, and then it's the same exact thing. All right, so that's how that works. Now, the question comes into effect: how do you actually borrow money if this is a decentralized platform? Well, that's where this gets really cool. Okay, so you can go into the Earn section here. Actually, let me start by going to the dashboard. So right here are all of the tokens that you can provide as far as liquidity is concerned. So I can put Ethereum, Bitcoin, Chainlink, Uniswap, USDC, USDC.E, which is just bridged USDC, Tether, DAI, and Frax into the GMX liquidity pool, GLP. Okay? And right here, you'll see what the price of GLP currently is. And this is what actually makes up GLP. And these are the exact percentages. Okay, for the index, if you will. So I'll explain to you how this works. So there's weights, right? So what percent, this is the percent that they want the Ethereum to make up of the overall portfolio. And you can see that it's not there right now. It's at 25%. You can also see it right there, 25.13%. So since they are below the total weight that they want, you will actually get a lower fee to buy GLP with ETH. Now, when you're buying GLP, what are you buying? Well, if you give them Ethereum to buy GLP with Ethereum, you're not actually buying a token called GLP. It's just dividing your Ethereum into all of these different tokens here, into this basket of assets right here. So you're not actually holding a token called GLP. If you go into DBank, which let me actually go. So here's one of my wallets. You can actually see it shows I'm holding all of these different tokens here, right? So you can see it doesn't actually say I'm holding GLP, which is awesome. So GLP is essentially just the liquidity that is available on GMX that allows you as a trader to borrow from that liquidity to place trades with more money than you actually have. And when you get liquidated, the people that are providing that liquidity actually get paid for doing so. And if you want to provide liquidity, you can go here to see what the weights are, to see what's off, right? The USDC.E right here is overweighted, so you're not going to get the best rate. So go to a different one, okay? To get a better rate on your GLP that you purchase. All right, so now let's go over to the Earn section here. When you purchase GLP, you are automatically going to be able to earn interest. Right now, the interest is at 7.55% APR. So what's really cool about this is it's almost like you're diversifying your portfolio to have a safer basket of assets because it's made up of a bunch of stable coins right here, but you also maintain the upside of all of these blue chip crypto projects up here. So while you have the potential upside from the blue chip cryptos and also the hedging of the stablecoins right here, you're also earning passive income. So you're protecting yourself to the downside while still giving yourself potential upside while you open the door to earning passive income for yourself. Now, this 7.55% is one of the lowest I've seen it. And this is completely dependent upon how much volume the exchange is actually getting. When there's high amounts of volatility, that means that a lot of traders are typically getting liquidated. And when a lot of traders are getting liquidated, you're typically going to be making money because you are the house in this situation if you were to compare GMX to a casino. So that is how that works there. Now, there is a chance that this actually goes negative and you lose money if the traders continue to make more and more money, which would result in you, the liquidity provider, not making money, which I don't know if that's happened yet. Don't quote me on that though, okay? Now, that is GLP. So now I want to show GMX. So GMX is the governance token for the GMX platform. So this is basically your ability to vote. So if you own a GMX token, then that gives you voting rights over the direction that the company goes in. So if you're not too familiar with governance tokens, what it essentially is when a company needs to decentralize, a crypto company wants to decentralize and form a DAO, they need to be able to give out voting rights somehow. So the way they do it is by creating governance tokens, and then they'll typically do an airdrop to all of their most loyal users of the platform. And since all of the activities on a blockchain-based decentralized application are transparent and open, they can see who's done what by looking at the on-chain analytics and looking at the on-chain history. And then they can take snapshots of who's performed certain actions during a certain time period, and then that tells them who is most likely going to be a good fit to have governance rights over the actual protocol itself. Protocol, decentralized application, same thing. Okay, so this is where our endless airdrop strategy comes in that we teach in our one-to-one crypto accelerator program, BCAP. If you want to learn more about that and how we go through the whole process of teaching you guys and how to fully understand this technology, it is in the description below. We have a free training for you. But let's get back to the whole point of this video. GMX is their governance token. So why is this valuable? Well, imagine if there was a token that you could purchase that gave you voting power over the Instagram platform. That would be worth a lot, right? A lot of companies would be buying that because they want to have voting power in the direction that Instagram actually goes in, because their business might fully dependent on it, right? So it's almost like transparent lobbying, if you will. Okay? This is GMX, the problem it solves, and how it goes about solving that problem. They also have nearly $1 billion in assets under management at the moment. Okay, now they also have a referral program. So if you want, I will have a referral link that's in the description, and you will get a reduction in trading fees for using it, I think. Okay, and there's also 2 different platforms. You can use Arbitrum or Avalanche for this. And now let's go over Synthetics. So Synthetics is a liquidity layer for DeFi. So it doesn't really have a front-end application that allows you to trade with it. Instead, they've created a baseline layer that is meant for other projects to build on top of Synthetics that can tap into the liquidity of Synthetics. Okay, and I'm going to do a little drawing for you guys in a little bit. That's going to show that a little bit more in detail. But just know that Synthetics is basically like the GLP of GMX, except a bunch of different platforms can actually tap into it. But that's also happening with GLP, with projects like Rage Trade, which are now tapping into GLP. And I'll go over, my overall thoughts on the 2 platforms after everything. Let's dive into this here and how this actually works. So you'll see that there is almost $500 million in total value locked. GMX does have more TVL. Okay, I would say that AUM would also be TVL. Now, but Synthetics, like I said, they're a baseline layer that other projects can build on top of. And here you can see some of the different projects that are building on top of and tapping into the liquidity of the Synthetics platform. So very useful if you want to build a front-end application, but you don't want to have to worry about getting all of the liquidity and managing all the liquidity and dealing with all of that. So here we have Quenta, which is kind of like the GMX leverage trading side of things that's built on top of Synthetics. So you can see right here, you can do your margin, you can use your leverage and all of that stuff there. Now, the interesting thing about projects built on top of Synthetics is that a lot of times you do have to use something called SUSD, which is bridging your USDC or whatever into the Synthetics platform to use their SUSD derivative. So here you would have to do that in order to be able to trade on leverage here. There are also other available options for utilizing projects built on top of Synthetics that allow for a plethora of different types of financial tools, right? So here we have overtimemarkets.xyz, which is leveraging the Thales platform, which actually allows you to do sports betting. This is all foreign to me, don't know what any of this really means, but you can do sports betting by leveraging the Synthetics liquidity in a unique way. Synthetics also allows for different projects to be able to utilize synthetic assets that are kind of like stocks, right? So stocks, but they're being traded as cryptocurrencies that track the exact price of stocks. That way, if you're somebody that's living in a third world country and you don't have access to maybe the US stock market or anything like that, then for the first time in maybe history, you might still be able to get access to that potential upside of investing in the US stock exchange or Europe or wherever, right? So you'll be able to invest in Apple stock, maybe for the first time, which is lowering the barriers and creating a more fair overall planet, right? Giving everybody opportunity where they previously maybe didn't have opportunity. That is synthetics in a nutshell. Now, if you want to actually provide liquidity, you have to provide liquidity by utilizing the SNX token, which is one thing that I don't really like about the longevity of this platform over GMX, which, to be fair, there might be things that I don't even fully understand about this project. So if you guys have any comments that say otherwise and why this is maybe an advantage, I would love to hear that down below. Okay, this is basically how everything works with the liquidity layer of synthetics. Oh, one more thing about SNX is that SNX is also used as the governance token for the synthetics platform. If you want to look through all this, you can. Looks super confusing, but I'm going to go ahead and go into my iPad now and start to draw some of these things out for you so you can kind of understand how all of the pieces fit together. Okay, I'm going to start by drawing the underlying blockchain that is fueling both of these, Ethereum. Okay, so here we'll use Arbitrum as an example, because GMX is built on top of Arbitrum. It's also built on Avalanche, which is totally separate, well, kind of separate from Ethereum, in that it's still an EVM compatible blockchain because it utilizes Solidity, but it is a separate blockchain that's a different, you have to bridge to it, right? You can't just send funds directly to it without utilizing an intermediary bridge. Okay, so now with this here, we do have GLP. So the GMX on Arbitrum can tap into the GLP pool on Arbitrum. And then we have the GLP pool that is on Avalanche, that the GMX on Avalanche can tap into the GLP pool, right? Now we have other platforms like Rage Trade, we'll say RT, Rage Trade, which is also tapping into the liquidity of GLP, right? So you see how this is kind of like a Lego blocks effect. So we can consistently have more and more applications that are tapping into utilizing GLP for its source of liquidity, kind of like how all of these other platforms are utilizing synthetics to tap into the liquidity of the synthetics platform, okay? So that is something that I want to point out. That's very important because that's something that is a huge overlap between the two platforms. Now, we got synthetics over here. We'll just say SNX, synthetics, that we have Quenta that is built on top of this. We have Lyra that's built on top of this. We have the Overtime that was built on top of this. A whole bunch of different projects that are actually built on top of synthetics. And then they all tap into the liquidity that's in here, in the same way that GMX is tapping into the liquidity over here, and Rage Trade is tapping into the liquidity of GLP here. So it works very similarly that way. SNX is also built on top of Optimism, so it can still leverage the layer 2 speed of transactions and efficiency of transactions, instead of just relying on the Ethereum blockchain. And now I kind of skipped over that, so I'll go over that really quickly in case if you're new. So Ethereum has very slow transaction speeds. I think it's like 14 transactions per second. So it's not very scalable, right? Imagine if you had 1,000 transactions that you're trying to get to go through at the same time. Well, when you can only do 14 per second, it's going to take you a while for all of that to take place. So it's also going to create an effect where you are going to have people battling for their transaction to go through, where they can pay more money to get their transaction to go through, which then increases the rate and goes higher and higher and higher, because people are continually trying to get their transaction to push through, so they're willing to pay more to have their transaction push through before everybody else's. Okay, so then it's just a race to the top. Then we had platforms like Arbitrum and Optimism come out that are roll-up solutions, that are layer 2 roll-up solutions that allow us to roll up a lot of transactions at once and then have those process as one Ethereum transaction. So a way to kind of imagine this is, imagine if you had a bus, and instead of having one person getting in a bus to go to the next destination, you have about 100 people getting into a bus, and then when the light turns green, they all go through to the next destination. It's not very efficient to just have one bus or one person aka a transaction, go in and then take off with the bus. So let's pack the bus full of 100 to 200 to 300 transactions, don't know how many, and then all go at the same time. And then you split the fees between each of those transactions until they finally settle, that data finally settles on the Ethereum blockchain. Okay? Think of it like a filtering system, if you will. And the transactions are trickling down and then eventually landing on, boom, the settlement layer, which is the Ethereum blockchain. Okay, so that is my chicken scratch explanation of how that works. Now I'm going to get into my overall thoughts real quick. Okay, so if we look at the baseline of what both of these protocols need in order to have success, it is efficient liquidity, right? There has to be good liquidity for the traders and the investors to leverage in order to be able to utilize the platforms effectively. And when we look at the way both of these platforms are going about providing this liquidity to the individuals like you and I that want to leverage that liquidity to trade with or make investments with, you have to look at the underlying tokens that are creating that liquidity. Now, if we look at Synthetics, you'll see that they actually merged their governance token with the liquidity providing token, which is SNX. So here you'll see what type of volatility that brings. So right here, you can see that Synthetics SNX was at $27 back in February of 2021. And now today it's at around $2. So if I am providing liquidity and we reach a bull market and I'm nervous, I'm going to lose my ass on the token because everything's about to dump, I'm going to remove my liquidity. And then that's going to create a cascading effect of a lot of people removing their liquidity, which would then result in an illiquid liquidity layer, if you will, right? So it just wouldn't make a whole lot of sense. Now, if we look at the contrary, which is the contrarian way that GMX is doing it, they actually separated their governance token from their liquidity providing aspect of the platform by having both GMX and GLP. And what they did is they actually made their liquidity token be something that you might want to hold as you're nearing the end of a bull market. So if I'm wanting to take profits on my tokens, I might decide that I want to move them into GLP. So because now I have a hedge against the volatility, but still potential upside if things continue to go up in a bull market. So I can actually see GMX acquiring more liquidity when you're at the top of a bull market, where I would imagine Synthetics would actually start to lose liquidity because people would be afraid that they're going to lose their ass on the value of the SNX token. And then that APR is not going to matter anymore. Because of that, I really, really like the idea of GMX a lot more. And I've also heard that there is potential where their liquidity will be tapped into also for synthetic assets like, stocks and whatnot. And potentially other things like sports betting, and who knows what that could turn into, because at the end of the day, it's just the liquidity that's available. If you can do sports betting with the liquidity on Synthetics, then why couldn't a platform be built utilizing GLP that also enables sports betting, right? It just needs that collateral and that liquidity layer so that they can tap into it as a front-end solution. So those are my overall thoughts. So I'm going to have to give this one to GMX. GMX is the winner in this situation. I just think it has more longevity. I personally am more comfortable with investing in GMX than I am Synthetics. I love that the governance token is separate from the liquidity token. And I love that one thing I didn't mention is that you can earn passive income by staking their GMX token. If I go over to here, you can see currently earn a share of the platform fees, which is only at around 2%, plus whatever these things do. Then you can look into that on your own. But that's going to be a lot higher when there's more volume, when we're entering volatile markets. So I love GMX. I use it quite frequently. The experience is very smooth. And I feel like Synthetics is kind of a more bulky experience for the user and the liquidity providers. If I want to be a user and I want to go on Quenta, then I have to utilize the SUSD, and there's just a layer of friction there. But if I want to go on GMX, I can just go right into it, click trade, and boom, now I'm utilizing the platform. and it's very simple and easy to use. And GMX has been holding up very, very well in comparison to every other coin. This is what it looks like max, right? From October 21st to June 23rd. If we look at synthetics, October, this is what theirs looks like from that time frame. The 21st area, 2021 area to right now. It's plummeted. So, and that's because this GMX technology is quite revolutionary, and people are noticing that they really need it. So that's everything that I have for you today. If you like this video, please give it a like and subscribe for future videos kind of like this. And if you really liked it, go ahead and let your grandma know about it, because we're really trying to make sure that we can bring crypto to the masses and provide education in a way that makes sense to everybody, not just the few that have already been in the space for a little while. We're not trying to use fancy technical jargon all the time, and when we do, we like to explain what it means. Okay, in a way that's so simple, like I said, that a fifth grader could understand it. Okay, now if you are tired of joining Discord communities that don't have your best interests in mind, that are maybe shilling different shitcoins to you or working with paid promotions, and you don't really know if you can trust them, or you jump in and you feel like everybody in there isn't quite at the same level as you are, well, we've created something called our Big Crypto Discord Pro, which is where we're bringing together all of the Avengers of the crypto space, if you will, to bring them onto our crypto rocket ship, to where we're bringing all the best minds together in the crypto space under one Discord community. And we also have our Big Crypto Accelerator program that is actually funneling people into the Discord by giving them education in the form of our 40+ hour long course curriculum, our weekly group coaching calls, and our one-to-one coaching calls as well. So you get full access to us, me, and my business partner, Yoni, who's actually on the Atom Accelerator DAO for the Cosmos ecosystem. So that's everything for me today, guys. If you want to learn more about any of those things, check the links below, and we got trainings for you. So I will see you guys in the next video.